Traders, it is July 3rd, so tomorrow's Friday, today's Thursday, tomorrow's the 4th of July, it's a holiday, so there'll be no trading, and I believe trading will end 3 hours early today, so for me, that is 10 o'clock Pacific time. So I wanted to just go over my positions right now. These are going to expire today, all these ones showing 7-3, there's quite a few of them, and looks like the market's been up. It's kind of dipped down a little bit, but it's on its way back up. And it's up right now for this account showing 988, 993. The economic news came out, and it's actually better than expected. Non-farm payrolls expected to be 120, actually up to 147. Private non-farm payrolls are down, expected 123. Down 74. Unemployment rate is down to 4.1. Last time it was 4.2. Expected to be 4.2. It's 4.1. It's kind of surprising. Hourly earnings are down a little bit, so that's in the red. Average work week is down just slightly from what's expected. Trade balance is up slightly. Last time it was minus 60.3 billion. And expected to be 70.5 billion, and it came out to be 71.5 billion. Initial claims, these are first-time people claiming unemployment benefits. Last time it was 237K, expected to be 240K, and it's actually down to 233K, so not as many people filing for unemployment. And then the continuing claims, people already on unemployment, last time was 1964. And it came out to be the same, 1964, so it's neither red nor green. There's still some economic news set to come out later in the day, but overall, I mean, it's kind of surprising with the mayhem that's going on in the economy that these numbers are showing the way they are. So I think that provides some stability here and provides a little bounce to the market. I think it's going to probably just remain and go sideways, not any big swings up or down. So looking at my position, the first one is HIMS. This is the cash secured put. It collected 75. I could buy this back for 25. So it's out of the money slightly. I could roll this. If I roll this, the same strike price of 46. So I could buy this back for, well, now it's up to 30, but I could collect 173 at the same strike price with the delta of 40. I could go a little safer and go down to like the 45 strike price, delta of 33, and at this 46 I would net 145. But HIMS is kind of an experiment. I'm not sure that's going to be something I want to be in long term, so I'm just going to let this play out, I think. So if the price goes down below 46, I'll get a sign. If it doesn't, then I'll get the cash back in my account, $4,600 for one contract. And I'm kind of out of cash in my account, so that's one thing I'm considering, is I want to have a little bit of some dry powder and have that available for new trades. This hood, I've got 2 contracts out on this. This one is actually in the money. And so it cost me right now $149 per contract to buy this back. I only collected $163. So I'm fine either way. I'm probably going to let this play out as well. I'm not going to make any moves here. I'm going to let this expire. And if it stays below 95, I'll get assigned 200 shares. And then I could go sell calls against this. So if I sold calls and went a week out, and was right at my strike price, that would be 360 times 2. I could collect 720. So I'm fine owning hood. I like this stock from what I've seen. And if not, then I'll get 9,500 times 2 back. So that's $19,000 I'll get back in my account if it doesn't get assigned. These IWMs are up quite a bit. This is one I have 200 shares or 2 contracts at 218. It's a call. These are against my leaps, so I do not want to let these get assigned. I'm going to roll this. I don't want it to get assigned, so I'm going to roll this here. Click on roll. And let's see if I go out to next Friday. That's 8 days away. Cost me $4.58 to buy this back. Part of that's an intrinsic value. Part of that's extrinsic value. But if I wanted my exact same strike price at 218, I could collect 563 with a total credit of 220. But the price has gone up quite a bit. I might want to jump this up and move it up. I don't want to move it up all the way to 222 because things could go down. I like to have a little bit of cushion. So if I just want to put $1 to 219, that's 488. So with the buyback of 453, I'd net about $70. If I went out another week to the 18th, that would allow some more premium to be collected, and I could roll this up higher. So from 218, I could roll up to like 220, which is kind of right in the middle. I'd get a total credit of 150. So I'm going to go ahead and roll this out and up. So going up from 218 to 220, collecting 542, and expiring in about 2 weeks. Total credit for my current position is 138. So part of this is extrinsic and extrinsic value. Intrinsic is the difference between the current price, 222.56, and the strike price, so 222.56 minus the strike price of 220. That's the intrinsic value, and the what was the premium? 540. So if I did minus 5, let's see, 545. So part of this is extrinsic value and extrinsic value. And extrinsic value is the juice I'm getting. So I'm using some working capital to buy this back, but I'm collecting, for me, when this expires, the extrinsic value will decay to 0, and I'll collect all that for myself. So the intrinsic value is 222.57, let's say, and that's the current price minus the strike price, which is 220. Minus 220. So that's the intrinsic value. Collected 530. So if I do minus 5.3, that's 273. That's really what I'm collecting as my premium for this, and the rest is just working capital. I've got another call now at 220. It's 2 contracts for IWM. I'm going to do the same thing. Going to roll this out. Going to go to 18th, and I'll stay at the same strike price. Cost me 240 to buy this back, so a total credit of 550. So again, 222.41, let's say, minus 220 minus 550. 309 is my premium that I'm collecting as extrinsic value. I have this NVIDIA put. It has gone in and out of the money lately. Right now it is out of the money, so I'm going to let this expire. If I do get assigned, that's okay as well, but I'm just going to let this one play out. I think that's my last one. This Amazon one's not due to expire until 7/25. This is a QQQ. Put credit spread. It cost me 66 to buy this back. I collected 130. Might just close this out. I'm not sure I want to stick with this for another few weeks. For now, I'll just let it play out. TNA is due to expire 8/15. SMCX not due to expire until 9/19. I got an NVIDIA call. This is deep in the money. This is gonna just, I'm gonna lose my shares, which is fine because my cost was 127. I'm selling these for 130, even though I'm missing out on the gains of 158. but this won't expire till 10/17. A lot can happen. TQQQ, it's gone way up. It's almost reaching my cost, which is my $85 call. This doesn't expire till 12/19. So again, a lot can happen with there. But I was bag holding on this for a long time, and it's come way up. So I'm going to get my money back for that, and I'll end up selling this and use the money for something else. I've got quite a bit of money, 300 shares, 25,000 in this total. So that's it for my making moves today. I hope you enjoyed watching. Make sure to like and subscribe, and we will see you on the next one. Thanks for watching.